move on. The double entry concept. This is the fundamental concept of all the bookkeeping and accounting area. So what is that? Perhaps some of you have heard that it's quite, popular, debits and credits. So this is what it is about. So I'll try to explain to you how it works. So the double entry concept means that every financial transaction will have effects in at least two accounts. So one on the other side, another one on the other side. So at least two accounts, because there may be more than two, and I will show it to you later on. The next rule is debits are offset by credits. Debits are on the left side of account, credits are on the right side, and the sum must balance. That means that debits offset credits. So in other words, on debit side, you enter 100, so you have to enter 100 on the other side, on the other account as well. And the net effect is 0. The sum must balance. And the next thing is a golden equation of the accounting. Assets must equal liabilities and equity. The trial balance, the balance sheet must balance, in other words. We will talk more about assets and liabilities and the equity later on, so it will be easier for you to understand. But for now, just remember that assets have to equal liabilities plus equity. Two more important things to remember. It will make it easier when it comes to bookkeeping, which amount should go as a debit and which should go as a credit. So debits increase assets and costs, and credits increase revenue, liability, and capital. So if you are booking a cost, an expense, the debit will go to the expense account, and the credit, you will find out where it goes. If you are booking a sale invoice, a revenue, your sale will go to the credit account, and the opposite account, you will see where it can go. So hopefully, I know it may not be easy for some of you, but this is as simple as it can be. There is no simpler way of putting it. It will become more, clear when we go through examples. So let's move on. So that's one of the examples of a double entry. The first one is when you enter a purchase invoice. For instance, you received a rent invoice from your whatever landlord, right? And you want to book a rent expense. So as I mentioned before, an expense is a cost. So your cost will go to a debit side, to the account building rent costs. For instance, your credit, the other side, will go to supplier's liability, because you owe the money to the supplier, to the landlord. And the second step is when you make a payment for this rent. So remember, it should be booked in 2 stages. When you make a payment, it's a different transaction to when you record the invoice, the cost, all right? So when you make a payment, this is the second step you see on the screen. You will debit your supplier's liability because you no longer owe the money. So the 2 red amounts contra themselves and they net down to 0. You don't owe anything else. You don't now owe the money to your supplier anymore. And you will credit your bank account because the cash is going out of your bank account. So it is decreasing the balance in your bank account. So that's just an example of how the double entry works. So you enter on one side and on the other side, both sides equal. And then when you decrease the amount on this account, for instance, supplier's liability, the cost will net down to 0. Okay?